Okay, so let me share my screen and then we can start by first looking at those questions and then we'll get into the session. Please, can you all see my screen?
Yes.
Awesome.
Yes.
Thank you. Thank you very much. So let me find the questions in the chats. Morning, everyone. As you're joining, please drop one thing you'd like to learn from today's session in the chat stream. That'll be our learning objective for today. Let's see what we would like to learn. I'll try to address that. So we have investment options. We have discussed investment options and what has worked for you. Perfect. We have investment options. I need detailed information on the investment option, best TFSA investment options, how to self-invest successfully. I like that one. Investment options and related experience. Okay. All right, so we can add more things to the chat session as we're going through the slides. Let's get on with today's session. So investment options is one of the things that I already have on my slides, but we would reserve a lot of time for question and answers as well. So in case we've not covered it, definitely feel free to ask at that point in time. Let's get into it. So good morning once again. My name is Joseph Sharemi. I'm a licensed financial advisor, but in terms of experiences, even way before I became a financial advisor, I've worked in a big bank in Nigeria, one of the top 5. And I also have accounting qualifications, so I understand numbers and I actually enjoy working with numbers. I also have experiences in other fields, IT consulting, business analysis, and a couple of other ventures. And I own my own business. I run several business initiatives, workshops, seminars, and this is what I enjoy doing. Now, for today's topic was actually born out of a question. Someone asked me, and interestingly, the person is on the call. Someone asked me if it was possible for us to, invest foreign currencies in our TFSA accounts. TFSA is tax-free savings account, and it's one of the many accounts that are available to Canadians. So the question was it possible for you to invest foreign currencies like USD, Euro, and all that in your tax-free savings accounts? So that gave birth to this session. I just wanted to educate people better on how to grow their wealth tax-free, and the focus will be on tax-free savings accounts. There will be many more sessions on so many other ways in which you can take advantage of taxes. That is, you reduce the amount of taxes you pay, and by that, you also simultaneously grow your wealth very quickly. So we'll focus on tax-free savings accounts. We'll be taking questions on things even maybe beyond tax-free savings accounts, but the entire objective is to make sure that we have additional ideas and knowledge on how to grow our wealth tax-free. If you have any questions, please pen them down, and of course, I'll try to attend to it later on. So what is a TFSA? We'll look at that. Investing with TFSA, that's where we'll touch on the investment options and opportunities. Then we'll also wrap it up with some questions and answers and exactly what to do and what not to do with your TFSA. So for a TFSA, TFSA is a tax-free savings account. TFSA. And it's one of the registered accounts that we have in Canada. What does a registered account mean? Registered account means the government of Canada provides this set of accounts, this type of accounts, so that you can take advantage of tax. Everybody's aware that you pay a lot of tax. I won't say too much tax, but we all pay a whole lot of tax. And so the government is saying, if you put your money into these vehicles or into these accounts, we'll give you some tax advantages. You have so many registered accounts that give you tax advantages, and TFSA is one of them. Each of those registered accounts that give you tax advantages work differently. For example, you have tax-free savings account, which we'll focus on today. You have RRSP, you have RESP, you have RDSP, you have FHSA. Because we are not talking about all those other ones, I won't even go deeply into it. But the whole idea is to know that we have so many types of accounts that you can hold that will give you tax advantages. And like I said, they all work differently. For a tax-free savings account, which will be the main focus for today, it was set up in 2009, and the eligibility requirements are straightforward. You need to be a resident of Canada for tax purposes. You need to be above 18 years old, and you need to have a valid SIN. If you're a tax resident, you most likely will have a SIN, but you need to be above 18 years old. Unlike some other accounts, maybe like RRSP, that you can have as long as you have an earned income. Again, that's a topic for another day. So those are the three main eligibility requirements. And from 2009 till today, if you've been qualified for TFSA, tax-free savings accounts, your contribution room will accumulate. We'll touch on a little bit more on what contribution room means. But again, it's one of the peculiarities of a tax-free savings account. You do not lose your contribution room. So if you have never heard about tax-free savings account up to today, even if you open it today and you've been eligible for several years in the past, everything gets brought forward till today so that the size of your savings account will be expanded to meet up with what you require based on what you qualify for. So it's a good thing to start up anytime. What are the main advantages? You will not pay taxes at all on any amounts that you make within your TFSA. Again, different registered accounts perform differently. They have different rules. But for tax-free, exactly like the name implies, you're not going to pay any tax at all if you make money within your tax-free savings account. However, there are several restrictions. Number one restriction that you have there is your contribution room. Contribution room for 2024 was 7,000. What that means, contribution room, is that's the maximum amount of money you can put into your tax-free savings account. For last year, it was $7,000. This year, it's also $7,000. In some of the prior years, you have 6,500, sometimes it was 6K or less. So you need to know what your contribution room is. So as good as this account is, you need to make sure that you're mindful of checking your contribution room so that you don't expose yourself to penalties. And I'll talk about those kind of penalties that you want to avoid later on. But just know you won't be paying taxes on your tax-free savings account if you put your money in there. So that means you can reduce your taxes, and you need to be mindful of how much money you can put in there based on your own contribution room. And your contribution room is something you can always find out from your CRA profile. Once you have access to your CRA account, log into it and you'll see your contribution room in there for TFSA and other registered accounts. Now that we know what a TFSA is, what exactly can it be used for? The short answer is anything. You can use it for both short-term and long-term goals. You can use it to save up for your emergency funds, which is like the very first thing that anybody should do before you even start looking towards investments. Emergency funds means funds that you can use to attend to something that comes up unexpectedly. You should always have that in your back pocket. So you can use your TFSA to save it up. And while you're saving it up, you can invest that same amount. And even though it is invested, there's a way to structure it such that you can easily have access to that money. So that's for a short-term goal. For long-term goals, you probably might be thinking about setting up a business in 15 years' time. You can use your TFSA to save towards that goal. So you need 50K to set up a business in 15 years' time. How much do you need to start putting in every month to grow towards that your target amount in 15 years? You can use your TFSA as well. And the advantage is that your money will be growing tax-free. So instead of putting it in your savings account that is taxed, because most people also do not know that the interest they earn on their savings account is taxed. Instead of leaving it there in your regular savings account, you can put it in your TFSA and the same money will grow tax-free. So you can use it for both your short and your long-term goals in a variety of ways. Now, the name says tax-free savings account, and a lot of people use it for saving, meaning they just put in money in their tax-free savings account and don't necessarily use it for anything. The bank will put it towards a safe investment, which is similar to your savings account, but now it's not going to be taxed. But in that case, it's going to be earning very small interest. So you need to be mindful of, yes, I've put in money in my TFSC. I need to invest this money to make sure that it grows. And that's why I have investments highlighted in red as part of things you should be using your TFSA to do, because that's the ultimate objective of holding a TFSA beyond just saving. Now, when we talk about investments, now we know it's better to invest with the money we have in our TFSA as opposed to just using it for savings. When it comes to investments, what type of investments can you hold in your TFSA? And part of the questions that we had at the beginning of the session was, what are the investment options, opportunities, and all that? This would partly answer that question. You can hold cash. Now, you can hold cash like we all understand cash, or you can have things like term deposits, meaning you fix your money, you fix your cash for a period of time, and you get some amount of interest. That way, it would yield more than just a normal savings. You can also hold like GICs, guaranteed investment certificates. GICs, like the name implies, are guaranteed. If you buy a GIC today in your TFSA and we say it's at 3%, you can go to sleep and come back at the end of the year and you'll get both your principal, that is the original amount you put in, and your interest, which is that 3%. There's nothing that would happen that would make you lose both your principal and your interest. So it is guaranteed. Then you have things like mutual funds. Mutual funds are a basket of investments. Different things come into play in mutual funds. But the key characteristic is when you put your money in mutual funds, the bank or the experts in the bank would manage those funds for you and charge you a fee for managing the amount. For your GIC, you don't pay any fees on it. But for your mutual funds, you will pay money on it because now they are actively investing your money into various things to get you the returns that you desire. So that one will cost you, mutual funds will cost you money. Then you have bonds. You can hold bonds. Bonds basically means you're borrowing either a company or the government money. And there are different types of it, municipal bonds, federal bonds, and all that. So you can borrow your money out to an entity that uses it and they'll pay you an interest for utilizing your money. You can do all that within your TFSA. And when you make money, like we said, you're not going to pay any interest on the money you make. Then you can also trade stocks, ETFs, and other securities. One other common question that comes up around this time is, can we do crypto? The answer is no. You cannot invest your money in crypto in your TFSA account because crypto is too volatile and it's difficult for almost anybody to track. So currently, maybe the rules might change tomorrow, but crypto is one of the excluded securities that you can trade in within your TFSA. Now let's look at some samples on how you can make money with a TFSA. You have an individual or two individuals that are within the tax bracket of 30%, and they have the opportunity to invest their money into, you can pick any of those items that we just saw. Let's say mutual funds that will give you a rate of return of 8%. So for each year, they have the opportunity to contribute $7,000 into their TFSA. Like I said, the contribution room expands every year. There's usually an annual reset where they would look at, okay, how much did you qualify for in the previous period? Have you finished using it? If you've not, they carry it forward into this year. So let's say you have a contribution room that can take $7,000 every year, and you're maxing it out. You're contributing the entire $7,000. Now, what will the difference look like with someone who uses a TFSA and someone else who uses any other thing outside of a registered account? For example, a regular savings account. So I own accounts with RBC, and this is real examples now. I own an account with RBC, several accounts. I have savings accounts, I have TFSA, I have different other accounts. If I put this 7,000 every year into my savings account, what does it look like in 5 years, 10 years, or 20 years? Or if I put this 7K inside of my TFSA and I invest it into the same kind of things. So if I put it in regular cash and savings, I can put it in regular cash and TFSA. What does that pathway look like? Again, I can do the same mutual funds in savings or in a non-registered account that is outside of a TFSA, or do it in TFSA. What does the growth path look like? So the assumptions are 7K per annum. My tax bracket is 30%. By the way, my tax bracket is way more than 30%, but let's assume it's 30%. And then you have a rate of return of 8%. What does it look like inside and outside of a TFSA? Now, this is what the result looked like. In 5 years, with 7K, I would have contributed $35,000. That's my regular, the money that I'm putting in, my own money. In TFSA value, earning at the rate of 8%. And by the way, I tested all these numbers using an Excel spreadsheet. I used AI AI gave me a variety of results. So I just used Microsoft Excel the old-fashioned way. So all these numbers are accurate to the decimal point. Now you have $7,000 every year for 5 years. That's $35,000. That's my own money into the investment. But in terms of how much I would have earned in my TFSA account at 8% per annum every year, compounding. Compounding means first year I put in 7K, it earns 8%. So both the 7K and the 8% on top of the 7K is reinvested in year two. And then both of them earn 8% in year two, on and on, onto 5 years. After contributing 35K, I would have made 44,352. But if I put the same amount of 7,000 in my savings account, I would have made 41,338. The difference between those two is $3,000 in 5 years. So that means for me, putting my money in TFSA, I have saved $3,000. If I had left it in a savings account, I would have lost this same $3,000 to taxes, because you are taxed on money that you earn within your savings account in any financial institution, as long as it is not saved in a registered account. So in 5 years, I've taken advantage of the TFSA to gain 3,000 on top of my money that has been growing in my TFSA. So that's how I came about this difference and the new value of 44,000. Let's speed up to year 20. And I've contributed the same 77K for 20 years. That'll be $140,000. And it has been growing at 8%. The final value I would have is 345,000 plus. But if I had left it in a savings account, it will be 260,000. What's the difference? $85,000. That's a whole lot of money. So within 1 year, you might not really see so much difference. Maybe it's going to be like $900 difference, which is still a lot, but it might not sound an alarm. But when we see what it looks like in 10 years, the difference is 13K. In 20 years, the difference is $85,000. Now that makes sense. And you're not doing anything fantastic or spectacular. You're just choosing to put your money into a tax advantaged account. That's all. You don't have to monitor any markets, depending on what you invest in. If I do mutual funds, like I said, my money is invested on my behalf and monitored, so I don't need to monitor it. If I do GIC, I can go and sleep. It's operated on my behalf. I don't need to do anything. So without the heavy lifting, you will still make so much money just by repositioning your funds. And you can use your funds for anything. Depending on how you structure it, you can access it anytime as well. Now, in percentage form, how much money, how much difference do we have at the end of 20 years for the person who put their money in a TFSA and the person who did not? The difference in their value, final balance, will be 32% apart. 32% more than the person who did not use a TFSA. So those are the highlights. There are a few things that you need to also be mindful of. Like I said, someone asked if it's possible for us to use a TFSA for warehousing foreign currencies. And the answer is yes. But in addition to that, and on that particular note, especially, if you want to use your TFSA for foreign currencies, because there's a strict regulation that talks about contribution room, with the $7,000, it is 7,000 Canadian dollars. So if you want to put money into your TFSA and it is in foreign currency, the bank will convert it on the day you are putting it in. So what's the exchange rate of dollar today? What amount of USD, United States dollars, can you put into your contribution room of 7,000 Canadian dollars? So they will do that conversion and then you can put in a foreign currency. And same thing applies with any currency. Now that's one. When you're taking the money out, you need to take it out into a bucket, so to speak. So you need to have a foreign denominated account if you want to take it out as foreign currency. If you want to take it out as Canadian dollars, most of us have Canadian dollar accounts by default. But if you're taking it out as foreign currency, you need a foreign denominated account to take that money into. So those are two things to be mindful of. But the answer is yes, you can use your TFSA for foreign currency transactions. In-kind contribution means you're transferring a security, for example, stocks or shares, from a different account into a TFSA. Can you do that? The answer is also yes. But the same thing happens. If you're transferring it, they'll look at the value on the date of transfer. And that's what they'll take in considering your contribution run. For RRSP transfers, answer again is yes. You can move in money from your RRSP into your TFSA if you know exactly what you're doing, because you need to answer the question why. Is it because you have a better rate in TFSA? Is it because you want to use it for so many other things outside of retirement? RRSP is strictly for retirement. Although you can take it out before you get to retirement, it's just that you're going to be taxed. You're going to be taxed anytime anyways whenever you take that money out of RRSP. So if you want it to be multi-purpose, then you can transfer some money into TFSA and invest it within TFSA. Then when it comes to inheritance, in case someone is wondering, can I also leave this money for my beneficiaries or for my survivors when I move on after life? Yes, 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 absolutely, you can do that. So you can use it for transferring wealth from yourself to your children or whoever survives you. And the way you do that is to designate, that is, you indicate who the money should be paid out to. So it can be your wife or your children. Once you note the person, by default, it should roll over to your wife. But if you want it to go to any other person, then you need to indicate who the money should be paid out to. And the money is paid out tax free. If this money was in your savings account, it will be counted as part of your estate, and your estate will go through probate, meaning the court would have to decide how should this money be appropriated. Is there a will and all that? That will cost you money. So they'll charge all those expenses to the total value of your estate before it is distributed. So this can pass on without going through that rigor. And again, it's not going to be taxed. There's something called final taxes. Final taxes is when one passes, they would assess your estate once again and know how much you should be paying to the government. The person has moved on, no, but the government will still collect a share out of whatever you've left behind. So if you have it in your TFSA and you have a designated beneficiary, it can transfer tax-free. The only thing they would require is for the other person who is receiving it to have a tax-free savings account so that they can move it from your TFSA to the person's TFSA. Now, a lot of advantages, yes, but there are a few things. One, we've said it already. Don't leave your money as cash because cash won't earn you so much money. So you need to invest your money within the TFSA. The second thing and the most important one is you need to know your contribution run. And this is why. When you surpass your contribution, let's say you just arrived in Canada today, your contribution in 2020 for 2025 is $7,000. Then you put in United States dollars, which is more valuable than Canadian dollars. You put in 7,000 USD United States dollars. Automatically, you've exceeded your contribution run. Nobody is going to pinch you today, but whenever CRA comes to that awareness, they are going to charge you 1% every month, not every year, every month, till you take out that excess. But because you are not aware that you have already put in an excess amount, that amount will continue to accrue. So remember, you put in your money is invested, meaning it is growing. So you are having excess over what you should have. So they would penalize you for the excess until you withdraw it at the rate of 1% per month. So that's minimum 12% per annum. Most investments don't even yield you 12% per annum. Imagine that you're now paying 12% against it. So that's why you need to be mindful of the contribution. And like I said, if you have a CRA account, go into your CRA account. The exact amount you have available for the year is usually in there. Then finally, in conclusion, what exactly are we supposed to do? If you have a TFSA account already, fantastic. That's great news. If you do not, then you need to open one as soon as possible, as soon as you are eligible. So you check if you're eligible. You can walk into any bank, check if you're eligible for a TFSA, open it up. You don't need to fund it immediately. So whenever you have the funds, you can start putting it in there. But now you have a space for you to save on taxes. Then, like I've said so many times, you need to know your contribution. It's very important. Then the last thing is to stay up to date, because a lot of things that concern all the regulated accounts or registered accounts, they change from year to year, or they can even change mid-year. Your contribution room is one of the things that changes from year to year. So you need to stay up to date on what's happening. Do you need to move funds around? Are there additional advantages you can take and all that? So you need to stay up to date. I share regular information, so you can join my WhatsApp group. If you are interested, for sure, I can definitely add you on in there and keep you updated. One way you can open your TFSA is with the bank. You can also open it with any other financial institution, meaning insurance companies, wealth management companies. And of course, I have affiliations with so many of these institutions. So if you want me to help you open it, I can do that as well. But I like opening up all the opportunities. The truth is, you can open it with any financial institution. So if you have your bank that you invest with right now, and that's what you want to do, absolutely opening a TFSA with them. If you want me to help you set it up, I can help you set it up as well. And we can take it a step further by looking at the appropriate types of investments for you to put into your TFSA. In the bank, they'll typically tell you, out of all those about 5 things that I showed, they'll typically push 2 things to you, mutual funds and GICs. But there are so many other things you can do outside of those two. And out of those two, they'll promote mutual funds more. Because like I said, that is how banks make money. They charge you a cost on the amount of funds that they invest on your behalf. So that will be it for me for today. Do we have any questions? Questions, please. Question time. So I have the first question. What strategy can I use in the next 20 years if I max out my 7K yearly on my TFSA? What do you think would be my maximum amount after 20 years? Fantastic question. So there are several other places where you can put your money outside of a TFSA account once you max out on your TFSA. And you have options like non-registered accounts. So for example, if you still want to do your mutual funds and every other thing, of course, you can do it outside of your TFSA, but now you'll be paying taxes. So I think one question not asked in this line that I would answer as well is, how can you invest your money tax-free still, even when you've maxed out your tax-free savings account? So how can you invest your money tax-free over the next 10 years, 20 years? So many answers come into my mind. You can invest in your life insurance policy. A lot of people don't know that you have investments within your life insurance policy that you can use for yourself. So this is not money for your beneficiaries or for your children, for yourself, either for any kind of project or for retirement, whatever you want to do with the money, you can invest within your life insurance policy. Because it is within the life insurance policy, it gives you a similar set of advantages like your tax-free savings account. Most prominent of that is the fact that you do not get taxed with the investments that you have within your life insurance policy. That one also has a room, but the ceiling is very high. I've seen policies that have a contribution room of over $60,000, up to $63,000, and it can even be more than that. So you can have your insurance policy, set up an insurance policy such that it has investments within it, and then the ceiling of that investment is very high. So unlike your TFSA that restricts you to 7K in some years, like this particular year, for your investment insurance policy, you can invest in there for a lot more than $7,000. And the second part of the question of how much can you make in 20 years? Again, the answer is a lot, depending on how much you put into the policy. So for example, if you set up an insurance policy and you're putting in, let's say $150, and $50 goes towards insurance itself, and $100 is going towards investment. So $100 in a year, in $100 in a month, in a year, would be $1,200. On that $1,200, you could earn an average of 10%. So that's on 1,002, you get an additional $120 tax free. And that's just on $100 in a month. So you can get more than that $100 in interest in a year tax free when you're doing $100 towards the investment portion of your insurance policy. It's a little bit tricky, but of course, because I'm an advisor, I can always help you set it up such that it looks after your objectives. So how much is your target? Is that 1,002 sufficient, or is your target way higher than that? And how much? We'll reverse engineer it to see how much you need to be putting in today to hit your target in the future. Outside of insurance policies, you have so many other things. If you understand real estate, you can get into it. If you understand stock trading, you can get into it. And of course, a variety of things. But before we know what is suitable for you, there's an analysis that takes place beforehand. We would have to assess your investor profile, That is, how much risk can you withstand? Then we'd also need to assess your budget, meaning how much money can you afford to invest? So all those questions need to be answered before we even see the investment options that will make sense for you. Mr. Akim, I hope I answered your question. Is there anything else you can ask?
You did well. I think the follow-up question has already been answered because the problem is, or maybe you can help me with this. I don't know why Canada maxed out contributions. Like TFSA is a good product or whatever, but you're telling me I can't put more than $7,000 in a year. I don't understand why. So yeah, and the next question I was supposed to ask is what you have said, because there should be a couple of opportunities that I should be putting my money in and reduce my tax implications. Unlike RRSP, sometimes I look at it like it looks good for us at the moment that you're working, like it reduces your tax in that current year. But when you want to access it to at the end of the term, when you retire, then the tax will come back, even though it might not be technically the as much tax that you're paying now. So I just want to have a picture of where else can we put our funds that is tax haven, so we don't, because
Yeah.
we already pay a lot of taxes
Taxes.
in Canada. Luckily, the new prime minister announced that he's removing GST for first home buyers. Those, couple of new initiatives which are well accepted and good, but in all, the tax to me generally is too much living here.
Absolutely. And thanks for those notes and contributions as well. So there are so many ways to save on taxes are like maybe top three, if not the number one thing on most people's mind when it comes to you know, holding more of the money that you've made, your hard-earned cash, not losing it to taxes is one of the problems in Canada and in some other countries as well. So yeah, there are so many ways, and one of it, like I said, is your life insurance policy. You can grow your money tax-free in there. For the registered accounts, which I would address in other sessions, you can hold your money in there as well, but they have different tax rules. Like in some of them, you will still pay taxes. TFSA, you will not pay taxes. Your life insurance policy, if you structure it the right way, you will not pay taxes ever. So it's possible for you to not pay taxes using those two things. But there are several other things. If we have one-on-one sessions, after this, if you want us to go deeper into it, please just send me a message. I'll leave my details on the screen and we can take it further. So I have a question here as well that says, if my contribution room is 20,500, can I contribute that amount at a time or is there a limit? Yes. So if you've accumulated 20,500 as your contribution room, you can put in that amount once. So you've carried forward from previous years that you did not use. So you have a total free space of 20,500. Then yes, you can use it. But if you've contributed anything in the prior years, you'd have to take away that portion before you put in the balance. If you need details on that kind of calculation, of course, once again, we can do that outside of this session. But the answer is yes, you can put it all at once if you have room to take everything once. Yes. So TFSA account is in my bank is a good option. Absolutely, it is. And then the alternative is if you want me to set it up for you so that we can look at the investment types that you can run in it, because opening a TFSA account is very easy. But when it comes to how to manage the funds in it, then it might start to become a little bit technical depending on what you want to do with it. And like I said, the bank will typically just promote two things and one more than the other: GICs, mutual funds, and mutual funds above GICs because they make way more money with mutual funds. So if you want to open up the opportunity for yourself, see the full picture, decide the mix that you want to use because now you have a better understanding of it. Absolutely, let's have a conversation and I can help you set that up and optimize it as well. But yes, your TFSA account with the bank is an option. Can one move TSA account from one institution to the other? Yes. And you can open as many as well. So let's say you have a TFSA account with RBC today, and you're considering, okay, why not open another TFSA account with me as an advisor? You can do that. Or with CIBC, you can do that. But the same rule applies. When we look at all your TFSA accounts all across Canada, the contribution room is the same thing. So we will tally all the amounts you have in each one. And if they surpass your total contribution, you will pay a penalty. So that's the only caution. You can have as many as 100 TFSA accounts in different places, but the total contribution room has to be the same with what the CRA profile permits you to take. Can I withdraw money from my TFSA at any time? Yes. If you leave it as cash, you can take it out anytime. If you invest it, then it will be dependent on that kind of investment. There are some investments that will lock in your money. There are some that will still allow you to take it out anytime. An example of an investment that allows you to take it out anytime is called redeemable GICs, guaranteed investment certificates, the redeemable type. It means I can take it out anytime. And then you have other types of GICs, obviously. Then well done, bro. Okay. Yeah, of course, the session is recorded. I definitely will do that. Yeah, I have the phone number, yes. So do we have any other questions? Any other questions? How to grow your money tax-free?
Someone raise up
Yeah.
his or her hand. Akko Aljama.
Oh, okay. Yes, please. Ask your
Yeah,
question. I didn't see
yeah.
that.
Good morning, and thank you very much.
Yes, sir.
Yes. So the question I want to ask is, okay, like you did your projection, $7,000 a year within 20 years, one gets about 334,000.
Yeah.
What I want to ask is that are there good investments in Canada where one can make about, between 12 and 15%? Because in 20 years, a lot of us will be retired. We'll be retired in 20 years, and 334,000 in 20 years may be peanuts.
Yes.
You understand? So are there investments that can give you between that 12 and 15% so that in 20 years' time, contributing that kind of money, you can probably have about $1 million at that time? Thank you.
Absolutely. Thank you very much for the question. So yes, the answer is yes. But here's the thing about investment that I would also like to highlight. Risk and return usually work hand in hand. So if you're talking about high returns, 12 to 15% is already either classified as mid or high level of returns. So if you're talking about high returns, in most cases, the kind of investments that would give you those type of returns would also have some inherent risks within it. So you have investments that can give you 12 to 15%. And for example, in 2024, S&P 500, which is an exchange traded fund, which is basically saying I have different stocks bundled together and I'm buying all of them for one price. The S&P 500 as an investment, which is one of the things you can do within your TFSA, for 2024, the rate of return was 24%. In 2023, the rate of return was 23%, thereabout. So it's possible for you to get these kind of returns. But again, like I just said, for S&P 500 specifically, it also has variability attached to it. Right now, because of the tariff wars between Canada and United States, the rate of return has declined. It is temporary. It will still rebound for sure. But if, for example, you get caught up within, oh, okay, I just put in my funds in January 2025, and you're tracking it because you want to get the 24% that I did in 2024, you will see that there's a decline and you might panic. But if you zoom out and you see the big picture and you see how much it has performed over the years, S&P 500 specifically has been tracked for at least 151 years. And over that period, the average rate of return is about 10%. So for specific years, it might do maybe 4%. And there are some years that it has done over 40%. But if you level it out, because it's a long-term investment that you're looking at, like your question was, in like 20 years' time, some of us will be retired. What kind of investments will give us a good yield at that target date? It's possible for you to get that kind of yield, but you should also balance it in your mind with the risk that might be inherent in it. So once you're mindful of it, you won't panic when there's variability, because you still know that in the long term, when you do the average, you might not get 24% that you did in 2024 every year. But if you do the average, you get maybe 10% or more. And there are several other ETFs, right? It's not just S&P 500 or large capitalization stock index. You have so many. You have NASDAQ 100. You have different types of ETFs and individual stocks. So you have different, and you have mutual funds and bonds and all those other things that give you different rates or segregated funds. Again, we can look at the specific ones that work for you, because we'll be asking two questions first. One, what does your budget look like? What is available for investment? Because even if you want $1 million in 20 years' time, and when we look at your budget, you can only afford to put aside $50 every month, it will not yield you $1 million in 20 years. So we need to look at affordability by setting up your budget, income, expenses, assets, liabilities, see what you can afford. Then we can see, okay, this is what is reasonable for you to put away in this type of investment based on your risk profile. That is, how much risk can you assimilate? Then we can work towards getting your target for you. But the simple answer is it possible? The answer is yes, absolutely yes. But we just need to do the basic work first. Check the affordability for you by doing a budget, then also check your risk profile by asking you a few questions to know how much risk you're interested in. There are safer investments. You have GICs that won't shake. Like nothing will shake GICs. Even if the bank should go under today, your money is still secured by CDIC, Canadian Deposit Insurance Corporation. So the government basically says, if RBC goes down today, we will give you back your money up to the tune of, I think, $100,000 per account. So you have different kinds of investments and opportunities out there, but it's just about how much risk can you take? Are you very conservative, or can you risk some money, or are you very aggressive because you have every other thing sorted? This money I have in this bucket, I can put it out there in the market. And if it comes back 2x, 3x, that is 2 times of it, 3 times of it, I'm happy. But if I lose like maybe 20% of it too, I won't die. Then of course you will get the best returns. You will definitely get the best returns. So yeah, it has to be customized that around you is the short answer. Is it possible? Absolutely yes. So please let's continue that conversation as well. I have your contact so I can reach out to you, Mr. Ako. And thanks for the question. Any other question as well? Did I answer your question, Mr. Ako?
Yes, you did. So good. Thank you.
All right, thank you. So do we have any other questions? Any other questions? Questions. We have, yeah. I think we have 12 minutes to the top of the hour. So you can leave your phone number on, okay, I have some people registered for this session already, but if you joined directly with the link I sent later on, then you can leave your phone number as well. I can reach out to you, but if you're leaving your phone number, you want me to reach out, you can indicate exactly what you want to discuss in front of it, so I can reach out to you and carry on that conversation. This session is recorded, so if you leave your contact details, I'll be able to send the recorded session to you as well. So do we have any questions while we wait? Let's see the charts. Do we have any hands raised? No hands raised. Do we have any charts? Okay, none. All right, so please leave your numbers so I can reach out to you. If you fill the registration form, then no need. I would have your numbers on the back end already. For the subsequent sessions, if you want the recorded session and you also want to be notified for subsequent sessions, because we'll be talking about all the other ways in which you can grow your wealth tax-free, the different other types of registered accounts, and different other investment opportunities out there. So if you want to be part of those conversations, absolutely leave your details, leave your number, or if you've registered, then you don't need to do that again. Thank you very much. In the absence of